This is David Morgan with the weekly perspective for the week ending 5 April 2019. Well, as a quick reminder on the Morgan Report, we know the first page is basically an advertorial to subscribe to either our free or premium service. But it's always worth hitting the blog tab, and that's what I've done here. So you can see we have some of our more popular posts here, and then, of course, you can scroll down and see what I do on a weekly basis, usually 3 or 4 interviews. I don't do a lot on the written word for the public anymore. Most of that's contained in the Morgan Report itself, but I do a lot of verbal interviews, audios, that type of thing. So don't forget to come to the blog probably, I'd say at least on a weekly basis, if not every 2-3 days, that type of thing. There is some ads over here. This is goldandsilver.com, Mike Maloney's company. This is a free webinar on how to beat the bankers using their own techniques, gold and silver for life. And other than that, it's mostly, as you can see on the left side, recent interviews. So let's get right into it. The Dow theory was confirmed this week. So if you're looking at the stock market, it says it's going higher. Major stock indexes tested their 2018 highs in several cases, and the transportation's cleared the 200-day moving average. Delta Airlines turned up, and the transport's again looking to gain ground. So we are in positive go mode for the stock market. It's not something that I necessarily anticipated, but it is what it is. And again, as I've always said, the market knows more than anybody. Foreign stocks also are showing signs of strength. Chinese stocks have risen twice as much as the United States this year, and that's boosting stocks in both the Australian market and in the Asian markets. Copper prices are looking pretty decent, and the semiconductor sector looks strong as well. So that pretty much takes care of the stock market. And moving into the bigger picture, this is from Wolf Richter, who, again, haven't featured him in some time, but he does very good thinking. I like his writing, and he's pretty succinct. So basically, I'm going to just look at the headline here. U.S. still the cleanest dirty shirt among manufacturing giants. Germany drops to debt level crisis. Japan contracts. China counts on government bailouts of the private sector, which is a little contradictory, which is true. I mean, that's all true. It's just a little bit I've contrasted against what I said a little bit ago about the Chinese stock market outperforming about twice as well as the U.S. market. And let me pause here and make something clear that most of you probably are well aware of, but some may not be. In a currency crisis, a meltdown, a loss of confidence in the currency, oftentimes you will see stock markets go higher and higher and higher. And the reason for that is because people look for somewhere that they can put their money that will preserve some of its purchasing power. Stock market's a good place because some of those stocks are real companies performing actual, manufacturing something of value or a service that's needed. And so you'll see stock markets rise even as a currency is being destroyed. You can just look back at Argentina as a recent example. So the idea that, here the government's bailing out the private sector in China, but the stock market's performing relatively well compared to the United States, who's basically in a bullish breakout right now, is not unusual. So it's like, wait a minute, David, this doesn't sound right. Well, remember, we're really in an unfolding, slow-moving currency crisis. A lot of us, and I'm probably guilty of it, give the impression that it's like an instantaneous, overnight, everything fails. And most of the time, that's not what happens at all. It grinds. It's, you lose so much every year of purchasing power, and it just grinds and grinds and grinds. And that's why they're able to get away with the inflationary nightmare, is because it doesn't happen instantaneously, and it's not significant enough of a move to where people actually notice it in a meaningful way. They just think, I don't feel as rich as I used to or whatever. So don't want to belabor the point. I think it's been made that don't expect just because the stock market's going up, that doesn't mean we still aren't having a currency crisis. Perhaps this will back me up a little more. This one of the people that I hope I never get to meet, Christine Lagarde. Yeah. Global growth outlook precarious amid trade tensions, says the IMF chief. Christine Lagarde says global growth lost momentum, but pauses its rate hikes will help boost activity late in 2019. The IMF director said last Tuesday that global growth has lost momentum amid rising trade tensions and tighter financial conditions, but pauses and things will look better by the end of the year. Yeah, we'll see. I doubt it. Things are not good. They're not horrible, and believe me, as this thing unfolds further as the time marches on, it's happened many times. It's nothing really to fear. It's something to be prepared for. That's really what it amounts to. And some of these scenarios, he who loses least wins most. In other words, the stock markets that go up in a currency crisis, as I just said a moment ago, will protect you to some level. But as an example, you might put in your 100 grand in the stock market, and as this currency crisis takes off, that 100 grand becomes 400,000. And when you take it out and cash it into whatever, the purchasing power is really worth 80,000. In other words, if I'm being clear here, you haven't preserved all of your capital, even though it's gone up in pieces amount of paper, but the purchasing power is not equal to when you put it in the stock market. And that's kind of why I'm doing this, is because I want you to know that the stock market is not really a good protector of your assets during a currency crisis. It helps, but the best place, or traditionally at least, the best place has been gold and silver, and particularly capital gains. And largely, not always, you will get that 100,000 example. So that put in the gold rather than the stock market might go to 800,000. So when you pull it out, instead of having the purchasing power of the 100,000 you initially tried to preserve, it has this 200,000 for that type of thing. I'm not trying to push gold, where that's where your only asset. I've said many times, 10% is probably sufficient for most cases. But I think anything less than that these days, the way things are going, from my perspective, I think 10% is probably something is a number to shoot for. You don't have to go much over that. But if you're at 3-4%, it's better than zero by far. But I wouldn't be content with that amount. I'd shoot for 10. I just got off our top level service that I share with the Gold and Silver for Life people Thursday, just a few days ago, and went over the Morgan report with everyone verbally, and talked about what we see with the inverted yield curve in a recession, and probably this year probably won't be officially recognized till 2020. And one of the people on the call asked me about, what else you look at besides the inverted yield curve. And I named a lot of things that we looked at, but retail is one of them. And this is just backing up this contraction. I'm talking about slowdown, etc. Owner of Kay, Zales, and Jared expects to close more than 150 jewelry stores. Jewelry is actually obviously a high-end item. The place you're going to spend, you're not going to spend money. I mean, the only reason you're going to spend money on jewelry is when you're getting married, or you've got basically excess cash. It's a very good indicator of when things are really, contracting. Jewelry stores go out of business. Here, it's right in your face. So if you hear, so much about it, everything's on track, fine, growing, blah, 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 ignore it. Look at the real data. Okay, and this week I'm going to close out with a little bit of a tease for a stock that I think is going to be one of the best speculative opportunities that I've had in the Morgan Report, and I've been doing this for over 40 years. There is a huge opportunity in electronic waste, and most people aren't aware of how much actually exists and how much there's going to be in the future. Another thing about electronic waste is this 5G, which I'm against, by the way. But when the 5G does come out, and I don't think much is going to stop it, that all these 4G phones are going to be turned in, and you're going to buy a 5G phone to be compatible. So that means there's a lot of potential smartphones out there that eventually will be put into the e-waste. So this is an opportunity that no one else in the newsletter business is talking about, writing about. I've followed this company for quite some time. Most everyone that is a premium member, paid member of the Morgan Report owns this company. We just did an update with one of the main principals just a few weeks ago. I do stay on top of these things, and So far, so good. There's plenty of opportunity left in this. So let me just play a little bit of this video and give you a taste of the possibilities that exist in some of these investments that we have available to you as a paid subscriber.
Electronic waste, or e-waste as it's known, is the fastest growing waste stream in the world. It consists of everything from scrap TVs, cell phones, laptops, cable boxes, and even that old computer that may be collecting dust in your closet. Today, over 50 million tons of e-waste is produced annually worldwide, and the United Nations is predicting that number to grow to 78 million tons by 2023. That works out to 148 tons of e-waste produced every 60 seconds. Well, to put this number into perspective, that's enough e-waste to fill over 240 Olympic swimming pools every day, with a total volume of 15 Houston Astrodromes every month. This year, the United States alone will produce over 11 million tons of e-waste from IT-based components, such as computers, laptops, data servers, and smartphones. There are many benefits to recycling these discarded electronics. Our natural resources are conserved. Air and water pollution caused by hazardous disposal of this material is avoided. Lower toxic waste in landfills, and the reduction of carbon dioxide emissions is significant. For every 1 ton of e-waste that is collected and recycled, over 1.4 tons of carbon dioxide emissions are avoided.
Oh, there is a lot to this story, obviously. And I, again, encourage everyone that is listening to the podcast or listening to the video update for this weekly perspective, consider one, getting on the free list if you're not on it already. And secondly, consider a subscription to the Morgan Report. Again, as a contrast sales, one of the best, let's say, small cap pickers in the business. A friend of mine is in Vancouver, and his service is roughly $3,500, so 7 times more expensive than ours. And another one, it's a geo that's well known, well respected, does a great job. He just tells you what he invests in. It's the ground that he and some of his associates have walked on. His service is over triple ours, and neither one of them have this pick. And I don't think either one of them are going to actually get around to this. It's not a mining company per se. It's a technology company, and it's a significant one. And it's associated with some majors, and I'm not at liberty to say who those are. I'm leaving that for our paid subscribers. But nonetheless, it's an opportunity that I don't want you to miss if you're so inclined, if you really are bent toward some speculations in your portfolio to spice it up, swing for the fences kind of thing. That's not what we focus on in the Morgan Report primarily, although we do look at everything. And when they come along, we're certainly going to tell you about them. We're more conservative than that. We do keep our top-tier cash-rich unhedged companies, and most of those from the time we got in are still up 400, 500, 600, 700% from the time we got in. Now, you got to remember, we started at the beginning of the bull market, but in those situations, you can write covered calls and get a nice, healthy income of somewhere between 15 to almost 20% a year just by owning that stock and renting your stock out, as I like to say, or basically writing call options because you own it. Anyway, enough said. I will be back with you next week. Keep your cards and letters coming in. The metals were flat this week. We see a break in the palladium market, and it looks like platinum caught a bid and is up to about 900. So I did an update for our paid members just a moment ago before I'm doing this weekly perspective. So till next week, remember, there is nothing more powerful than the truth.